Join fast. I'll just wait for 1 minute and then we'll start. Okay. So how are the papers? Yeah. How are the papers basically? Hi, hi. Yeah. Good evening. So joined everyone. So how are the two papers? IEIFS and this AFM. Okay, type na. Those who are watching on YouTube, you also. How are the papers? Type in the comment section. Okay. Type in the comment section. Everyone. How was it? Papers? Everyone. Those who are in the class. IEIFS and this AFM. Chalo. Let's start. Here, today we'll be completing two topics. One is the introduction and retail versus corporate. These two topics will be completed. It is for 1.5 hour. Okay. So first intro. What are banks basically? These are the financial institutions that perform deposit and lending function. Deposit and lending means what? What is the job of bank? To take the deposit, to give the loans and earn the income between the two, right? There are various types of banks in India and each is responsible to perform different functions. So what are the various banks? Firstly, understand what do you do in banking? You take the depositor's money who's having the excess money, excess. Depositor is always having the excess money, isn't it? Depositor, say this. He is always having the excess money. Excess means extra money he is having. That's why he or she can keep the deposit. And excess is given to the shortfall. Those who are having short, right? So money is given from excess to short. Got it? So next, what are the various types of banks? Central bank, cooperative bank, commercial bank, RRBs, LABs, local area banks. Nowadays we have this new bank structure, that is small finance banks, SFBs. Okay. So these are the various types of banks. Nowadays we have new banks, that is called as neo banks. These have also come in. Anyone knows any other name in banking? What are the various types of banks? Okay, central, cooperative, commercial, RRBs, local area, small finance banks, neo banks, and there is one more like this SIDBI and Exim Bank. NABARD, SIDBI, Exim. What are these banks? These are special purpose banks. Okay. So let's look at it one by one. Okay. See this. Others also have given. Merchant bank, treasury. This is also a function. Trade finance, investment management, wealth management. These are various functions. Right. These are the various types of banking. What are the various types of banking? These. Look at this. Banking. Individual and firms. Individual means what? It is for the retail customer. Retail and entrepreneur. So entrepreneur means this is related mainly to agriculture and MSME. Retail is what? Mass and HNI, right? Mass and class. Firms means what? This is corporate banking and MSME. So wholesale or corporate, MSME, micro, small and medium term enterprise. So these are the various types of banks. Plus there are other banks called as government division, but these are a part of the government part. These are part of banking. So these come under wholesale banking only. So importantly remember what are the various types of banks is individuals and the firms. Banking targets is individual customers and the firms. Retail individual means what? Again retail and entrepreneurial. Kindly note this. Retail will include again two things, two parts: mass retail and class retail. Entrepreneurial means what? Agri and MSME. Firms wholesale and MSME. Okay. Wholesale means it relates to corporate banking. MSME means micro and small medium term. This is very important section nowadays. All the banks are strictly have been made compulsory to focus on it. Okay. Next, Reserve Bank of India. It has divided the banking system into scheduled banks, scheduled banks and non-scheduled banks. What are the scheduled banks? Scheduled banks are of two types: commercial banks and cooperative banks. Okay. So scheduled banks, it is further divided into commercial and cooperative banks. What are commercial banks? These are basically your nationalized banks, public sector. Okay, private sector means HDFC, ICICI, etc. RRBs, regional rural banks. Okay, and foreign banks. Okay, these are the four main types. Plus, we have something more. As I told you earlier, SFBs, small finance banks. Okay, these are also under the commercial banks only. Then cooperative banks. Cooperative banks are of two types: urban and state. Urban means as good as private banks. Okay, they don't have a government backing. State government means state cooperatives. These are various. These form various structures: state cooperative, district cooperative. Okay, that much is enough. This further things are not needed now. This is gone. All these things. Okay, and non-scheduled banks means those which are. I'll show you that. What is a non-scheduled bank? Those which are not there in the second schedule. Okay. So what is the scheduled and non-scheduled bank? Scheduled means what? Any bank which is listed in the second schedule of RBI Act 1934. There are two terms now. One is in RBI Act 1934 and it also satisfies the condition of BR Act 1949, clause 42. Okay. So second schedule of RBI Act 1934 and follows the clause number 42, criteria of BR Act 1949. Minimum paid up capital to set up a bank in India is 500 crores, of which promoter should have 51% share. Earlier it was only 200 crores. So now it is minimum 500 crores you should have to open a new bank. Okay. Promoter should have 51% share. See here, very important information over here. These questions are asked. Minimum paid up capital to set up a bank in India. So it is 500 crores. What is the scheduled bank? Under the second schedule. Kindly remember this of RBI Act 1934. Everyone kindly first download the Adda 24/7 app. Those who are watching on YouTube, kindly download it and then start watching your YouTube also through this. You get free study material, live classes, ebooks, everything in this. Okay. What are RRBs? RRBs means regional rural banks. These are basically owned by or not owned by actually. These have a major stake of this commercial banks, means public sector banks. In fact, these were set up in 1976 and the 75 and the act came in 1976. Okay. So these are special types of commercial banks that provide concessional credit to agriculture and rural. Now look at this. The priority sector lending for RRB is 75%, whereas for us it is 40%. That is the main difference. Okay. So RRB main this financing part is agriculture, 75%. Okay. Now what is the share of various banks in RRBs? Central government, the share is 50%. State government is 15%. And commercial bank is remaining 35%. This commercial bank is known as a sponsor bank. Generally, this is a public sector bank. Okay. So, central government 50%, state government 15%, and commercial bank 35%. Kindly note this classification, very important from your exam point of view. It is sure to come in the exam. Sure, be sure about this. It is definite to come in the exam. Okay, this one. Okay. So sponsor bank means that bank which is having 35% stake. LABs, local area banks. Now LABs are similar to RRBs. Okay, I'll just give you an example of this. Why am I saying this? RRBs are sponsored by the public sector banks generally, and these LABs are generally sponsored by the private sector banks. Okay, I'll show you. Introduced in India in 1996, they are organized by the private sector. Look at this. Organized by the private sector means basically what? It is similar to sponsored by the private sector. Okay. Earning profit is the main objective of LAB. Now every bank is having the same objective. LABs are registered under Companies Act 1956. At present, there are only 4 LABs. The names are given; they are not required. Mainly in South India. Okay, all the LABs are mainly in South India. So remember, organized by private sector bank. As RRBs are organized by public sector banks, LABs are organized by private sector banks. Okay. Specialized banks means these are just I told you that when we did a classification, SIDBI, NABARD, Exim Bank, these are specialized banks. So these banks don't have any branches. So what do? They provide soft loans. What are soft loans? Kindly note. Now I'll explain you something which is not given in your books also. Specialized banks provide soft loans. What is a soft loan? Soft loan means what? The subsidies given by by the government schemes are actually given by these banks. See this. What we generally require, suppose if any MSME is there, micro and small medium enterprises, okay? If any MSME is there, you have to give, let's say, the CC. So generally what happens, 75% is given by the bank, 25% is brought in by the customer as a margin. This is a general rule in banking. But when SIDBI comes in, or Exim comes in, or NABARD comes in, what do? This 25% which is to be brought by the customer, they divide this into two parts. One is 20% and next is 5%. So this 20% is given by SIDBI or NABARD or Exim, and 5% is only brought in by the customer. So net the customer has a margin of only 5% over here. 5% customer, 20% SIDBI, and 75% is this commercial bank. Okay. Small finance banks. So small finance banks have been means organized lately. So the small finance banks looks after the micro industries, small farmers, unorganized sectors of the society. So their job is micro industries, small farmers, and unorganized sectors. Okay. RBI has mandated that minimum paid up working capital equity of small finance banks is 200 crores. What is there in our commercial banks? 500 crores. In small finance banks, it is 200 crores. Okay. What are the various examples? The examples of EU Small Finance, Equitas, and General Small Finance. So 200 crores except for those small finance banks which are converted from urban cooperative banks. So those banks, UCBs, which have converted themselves into SFBs, need not have this 200 crores. Otherwise, all the SFBs which are formed, like all these names, AU, Equitas, and Jana, these have to have the minimum paid up capital of 200 crores. Everyone subscribe to Officers Adda 24/7 English channel. Okay, subscribe to it right now. Click on the bell icon. Very important. Okay, all these free classes, free marathons, you'll get it on this channel only. Subscribe to it. Click on the bell icon. English channel, huh? English and Hindi both are there. You can click subscribe to both of them. What are payment banks? These are lately introduced. Payment banks means what? Generally, all these mobile companies and even the Indian Post, they have converted themselves into payment banks. Even Jio has come up with a payment bank, right? So payment banks are newly introduced in the banking. Okay. People with account in the payment bank can only deposit amount up to 2 lakh and cannot apply for loans or credit card under this account. So under this payment bank, you can have a maximum deposit of 2 lakhs. You cannot apply for loans or credit cards. So this payment bank cannot give you loans. Okay. What is the minimum capital? Minimum capital required is 100. What is this? 1, 2, 3. 1000 million, or you can call it 100 crores. Okay. Minimum paid up capital is 100 crores. Minimum initial contribution of the promoter to the payment bank shall be at least 40% of the for the first 5 years. So important condition you remember 100 crores. That is important. They won't ask you this 40% part, but at least 100 crore part they'll ask you. And this 2 lakhs. Person can have with the account in payment bank can have an amount up to 2 lakhs. Okay, deposit amount up to 2 lakhs. It can't go beyond this. No loans are allowed. Okay. So got this point. What are the important points on this slide which will come in the exam? First is amount of 2 lakhs in the savings account. Cannot apply for loan or credit card from that bank. Okay. 100 crores is the minimum paid up capital. 40% of should be from the promoter. Okay. Promoter for first 5 years. Later, after 5 years, you have to remove it. Okay. Airtel Payments Bank, Jio Post Payment Banks, India Post Payment Banks, and Jio Payment Banks. So these are the examples. Airtel, Jio, India Post, all have converted themselves into banks. Okay. The money received as deposit can be invested in secure government securities only in form of SLR. So very important, these payment banks cannot invest the money in general stock market or this proprietary books like we have in for our normal banks. They can invest only in government securities for SLR purpose. Kindly note this. This must amount to 75% of the deposit. 25% is placed as a time deposit with a scheduled commercial bank. See this difference. Firstly, the this deposit with the bank, it can get this loan is this payments bank. Loan is not allowed, so they can't give it as a loan. What can they do? They can invest only in government securities, 75%, and 25% as FDs. So this will restrict these banks. They can't earn profit in this that much. Because our banks, what do? Our commercial banks give the loans, right? And they can invest in private bonds also, not only in government securities. Okay. Payment banks will be permitted to make personal loan payments and receive personal payments and receive cross-border remittances on current accounts. So they are allowed to make the personal payments and cross-border border remittances on current accounts. Okay. They can issue debit cards. Now this is the catch. The catch is they provide loans through partner banks. Very important one. So what happens over here if Jio Payment Bank is working? So Jio Payment Bank will allow the loan through any other bank, nationalized or private bank. Okay, so partner bank. Here they'll act as a agent. So for them, this will be a third party product, right? Third party product, because here they are acting as an agent. They are earning a commission on that loan. What are neobanks? Neobanks are new terms nowadays. What are neobanks? These are digital only banking platforms that operate solely online. Kindly note, neobanks are not the physical banks. They don't have any branches. For example, Paytm, PhonePe, they are also acting like neobanks nowadays. They are providing loans to the customers. So these banks don't have physical existence, no physical presence. For example, I'll give you Fi Bank. There is a bank called as Fi Bank in our country. It's a bank. So what does it do? See this. Transactions in traditional banks could require a lot of time. Neobanks provide seamless online experience by bringing in an experiential digital layer on the top of traditional banking. Means what? Look at this. Five Bank will have a tie-up with, let's say, HDFC Bank. Okay, it will have a tie-up. So HDFC Bank is giving a deposit rate of, let's say, 3.5% savings rate. So what will Five Bank do? Five Bank will act as a layer in between. It will give extra 0.25%. So Five Bank will give the 3.5 plus 0.25. So it will give 3.75% to the customer. So customer will directly deal with Five Bank, although the customer is having an account with HDFC Bank. So there's a layer over here, layer. See this digital layer on the top traditional bank. Okay. They always work in partnership with the physical banks. They can't have their own existence. They'll always work with in partnership with the physical banks, which are having brick and mortar. So these are fintech firms that function like banks and operate digitally. Fintech firms that function like banks and operate digitally. Now, even I would suggest you see this Amazon, that is also acting like a neobank. You check, you get the loans from Amazon nowadays. Loans. Similarly, Flipkart. All these are acting like neobanks. They don't have a physical presence. Okay. A collection of financial apps and services. So these are basically the collection of financial apps. The primary purpose of neobanking in the economy is to provide cutting-edge financial services and facilities through fintech and AI at a low cost. So basically, it uses maximum technology. This AI. There are no conventional brick and mortar branches of neobanks. So no conventional branches. See this example. These are the traditional banks which are having brick and mortar. Okay, brick and mortar means basically physical branches. Then these are digital banks who have both brick and mortar also and online also. So these are digital banks who are having both brick and mortar and online. Now these are neobanks. Neobanks don't have a brick and mortar, completely 100 online. These are mobile startups. Okay. So these are the three bankings which we generally use: traditional, digital, and neobanks. Wholesale banking. Now, what is the income or percentage of income of retail banking in various segments? So any bank will basically have three types of income. One is wholesale banking, means corporate banking. Corporate banking will be one source of income. Second is wealth management, and third is retail banking. Okay. So these are the three sources of income for any bank: for corporate, wealth, and retail. Generally, look at it, retail banking will have 60% of the share in the income. 60%. Wealth management will have 15% generally. And this wholesale banking corporate will have 25%. Okay. What is the difference between corporate banking and retail banking? Everyone. See, I'll give you a simple example. In corporate banking, suppose if I'm having 1 crore rupees, 1 crore I'm having with me. I'm a bank, let's say. I'm having 1 crore rupees. So in corporate banking, what will I do? I'll give this to only one customer, let's say Reliance or this Tata or any company, let's say 1 crore to only one customer. Whereas in retail banking, what happens? If I'm having 1 crores, I'll divide this into 100 parts of 1 lakh each. 100 parts of 1 lakh each. So 1 lakh means what? 1 lakh into 100 becomes 1 crore. So I'll give to each client 1 lakh. So 100 clients I'll give 1 lakh. So what is the advantage over here? If I'm giving 100 clients 1 lakh rupees, there are less chances that all the 100 clients will become NPA. there are less chances, right? So that's why financing to retail is always better. Why? Because in retail banking, what happens? The risk is divided. Okay. This segment of retail banking is the largest earning contributor. It is a segment most people are familiar with. It includes bank branch. Products include your saving current FD and mortgages loans. Okay. The segment is also known as personal banking as it serves to individuals. But not only individuals, even the small commercial clients are also allowed in retail banking. Okay. So you have your current account also, you have your CC also in retail banking. Smaller amount. Okay. Generally, we have proprietor, partner, private limited, LLP. All these are there in retail banking. Right? In retail banking, the main source of income is what now? TPP, third party. Okay. Revenue from retail bank is split into interest and non-interest. So retail banking means what? Interest versus non-interest. What is interest? From your regular this business means loans. Interest means basically loans. So loans which I give, I'll get the interest. I'll subtract it from the deposits. So net net what I'll be having is my spread. And non-interest. Non-interest means what? Basically here we are dealing with third party products. See this, income to banks will always be of two types. One is interest, loan, and second is TPP, third party. Net interest income accounts for approximately 70% of the revenues. So income, this is the main job of banking. Third party is not the main job of banking, although this has become. Nowadays, how many of you get the weekly targets for insurance? How many of you get weekly targets for insurance? Do you get it? Isn't it? Nowadays, third party has become the main job of banking. Non-interest this contributes around 30% of the bank segment, revenue segment. Okay, non-interest means TPP, third party. Okay, evolution of banking. So many theories are there. First bank came in 1774. The evolution of retail banking in India can be traced back to the time of foreign banks. Foreign banks came in over here first. The conventional banking business was carried out by public sector banks, and mainly they were focused on this corporates. Okay, earlier the banking was only corporate banking. All your nationalized banks were earlier corporate banks. All. You name it, you have it. After the nationalization, the scene changed. Okay, customer and industry segmentation was adopted in the business plan of the banks. So customer and industry segmentation. Okay. Now, what do you mean by this? There came the difference between retail banking and industry means corporate banking. Okay. There is no attempt to offer products and services based on the specific customer segments in a focused way. Earlier, it was not there. Earlier, all our banks were just corporate banks, no customer orientation. Those were the happy days in the banking, very happy days, isn't it? Even your seniors might be telling you, banking job is very good. Many of your relatives might be telling you, banking, wow, very good. आराम से जाने का, आने का. 10:30 go, come back at 5:30. They don't know now what the banking is. Now the bank starts at 9 a.m. and when does it end? You don't know. It ends at 7 p.m. also, 8 p.m. also, anytime. You don't know, right? The entry of private sector banks in 1990s gave the actual fillip or new energy to the banking system. What happened was private sector bank came in 1991 after the Narsimham committee gave the recommendation. Narsimham committee gave the recommendation that we must bring in the new private sector banks. So actually they started the operations in 1994. Okay, but Narsimham committee started in 19 was put up in 1991. That committee had given major recommendations. What are the prerequisites for the success of retail banking? Means how will they succeed? Retail banking. Channel innovation means what? We must innovate the new channels. Means what do you mean by innovate? Earlier we are what we were doing. We are doing only branch banking. Customer used to come to the branch and we used to give the loans or take the deposits. Now what has happened? Then things changed. From branch banking, we went to doorstep banking. We entered the house of the customer and gave the service. After this came this what internet banking on the laptop, PC. Then came app banking. Today's app banking is on the mobile. Everything is on the mobile, right? Direct banking, fastest growing and dominant channel of the future, right? Direct banking means all these alternate channels. Product appropriateness. You must have correct product to meet the customer needs. Whatever the customer wants, that's important. Not what you have is important. Pricing. The pricing means the loan rates and the deposit rates. They should be always in the as per the current market situation. It shouldn't be against or ahead of anyone. Okay. Scoring models. Scoring models are very important. Under scoring models, what do we have? CIBIL record. Scoring model means basically CIBIL record. Okay. Consumer protection environment. Nowadays, any customer can go to the Consumer Protection Act. Any customer, isn't it? So, scoring model and consumer protection environment. These are the requisites of success. What are the challenges? Consumer protection, right? Every customer can go to this consumer forum nowadays. Inadequacy of MIS. MIS changes, constantly keeps on changing because new customers are added. Understanding the KYC AML. Now AML issues have become very strong. You don't know which of your customer will do the terrorist activities. Managing the risk, very important part, managing the risk, right? Effects of disruptive new technologies. Disruptive means what? Which are going to change the entire banking. AI, blockchain. We'll be studying this when we come to the technology part. Continuing growth. Constant growth is required because growth is a way of life. If you don't grow, your stock value goes down. What is the future? Rise of young Indian professional. All complete India's average age is less than 35. Growth as an economic superpower. So our country is growing like as a superpower now. Increasing purchasing power of the middle class. Middle class is getting money in their hands nowadays because of this UPI. Everything has changed because of UPI. Earlier, the chai wala was also having this money, huge cash inflow. The samosa wala was having the cash inflow, but it was not reflected in the economy. Now what happens? Even the samosa wala's money comes through UPI. Financial market reforms, right? New things have happened in the banking. Bonds, all these things have changed. Okay. So that was about introduction. Now the second part, we'll do it after 2 minutes. Okay. So we'll take a break of 2 minutes. Okay. And then we'll start. Chala, let's start. Now, this is the second topic, retail versus corporate. Now, understand the difference. Corporate means what, retail means what. Already I've explained some part in the first chapter. Means, I'll give you a simple example. Like, now let's take the example of 1 lakh rupees. 1 lakh is a small amount. Let's consider 1 crore rupees. Okay. So, if I'm having 1 crore rupees in corporate banking, what do? I give it to only one client. Okay, one customer. But if I'm in the retail banking, what will I do? I'll give this to 10 clients, 10 lakhs into 10 clients. Okay, or 1 lakh into 100 clients. So, because of this, what happens? My risk gets divided. My risk gets divided. Here, what is the chance that one customer will become NPA? This corporate client. There is a huge chance. One customer can become NPA. What is the chance that 10 customers of retail or 100 customers of retail can become NPA? Very less chance. All of them. Out of them, 2 to 5 may become NPA. Right? So that is the difference. So that's why the risk in retail banking is always divided. So let's look at the main points of corporate and retail. Firstly, in corporate banking, small number of customers, right? Small number of customers. Second one is narrow client base. Client base is narrow, means again small number of customers. Large value transactions. Look at this. We are only focusing on corporate right now. Large value transactions. Large number of transactions. Even transaction number is high. Corporates give huge transactions. Okay. Interbank transactions are there. Interbank within the banks. PNB giving funds to SBI, SBI giving funds to Bank of Baroda, then to Union Bank. All these. Interbank transactions. Large sum of money is involved. Huge amount is involved, right? Interbank markets, right? Interbank markets are involved over here. Interbank markets means bond buying and selling. So all these are under the corporate banking. Funds for business undertakings. So funds for business undertakings means the companies require the loans, and the depositors are large corporates like these mutual fund companies, pension fund companies. These are the depositors who give the loan. Low cost of processing. So processing cost is low in case of corporate banking. Okay, because very few employees are required. Here in retail banking, it's reverse. Here there are large number of clients. Mobilization of deposit from individuals. You have to get the money from individuals, right? Lending to small businesses, right? You can't lend it to big clients over here. Small businesses. Large volume and low value transactions, right? Volume and low value. Liabilities are mostly related to various types of deposit accounts. So deposit means what? Saving current FD mainly. You have a third party system, third party payment system, or third party TPP products in retail banking mainly. Loan portfolio is dominated by home loans and consumer loans, right? In retail banking. Processing cost is high. Why? Because large number of employees are required. NPAs. The NPA in corporate banking is big. That is the only disadvantage. Whereas NPA in retail banking is small, right? Less NPA. Retail banks are the visible face of the banking, right? Means suppose if I say I want to go to Union Bank, it means what? I'm talking of branch of Union Bank. So retail banking is a face with bank branches located in main cities. Always remember, retail banks are always located in main cities. They should be. Corporate banks, it's different. Corporate banks don't directly deal with the clients. They can be outside, means not within the city limits or within the highly busy area. Okay, they provide to the clients what loans, credit, this term loan, CC, and checking accounts. What is checking accounts? Checking means basically current accounts. Kindly note the difference between checking and current. In checking account, okay, no cash transaction is allowed. No cash transaction. Also, there is no minimum balance or this MAB is not there in checking accounts. Whereas in current accounts, cash transaction is allowed and MAB is there, right? So, in checking accounts, we don't have minimum balance. Many of the small finance banks are having checking accounts now. I've seen one in the Equita Small Finance Bank because I am myself having one checking account with them. Okay, so basically checking and current. Understand the difference. In checking accounts, no cash transaction is allowed, no minimum balance is there, no minimum balance. Okay, whereas in current accounts, cash transaction is allowed and minimum balance is also there. Difference in customer base, right? This already we have seen. In retail banking, there is a huge customer base, whereas in corporate banking, customer base is limited. Limited to what? Mid and small companies. Transactions. Retail banks involve high volume and amount is less in retail banking. High volume and amount is less. Many transactions we get, right? Depositing 500 rupees, depositing 300 rupees, withdrawing 400 rupees. All these are under retail bank. Whereas in corporate banking, it's not the case. It directly starts from crores. Okay. Corporate bank lends massive amounts of money to the business clients. Massive, huge amount. Therefore, transaction involved in retail and corporate banking is significantly different, isn't it? In retail, volume is high, amount is less. In corporate, this volume is also high and amount is also high. Both the things are high. Processing cost. In retail banking, processing cost is huge, whereas in corporate banking, processing cost is lower, right? Risk involved plus NPA. In retail, it is very less. In corporate banking, it's high. Kindly remember this. In corporate banking, the NPA levels are also high, and there are chances of NPA, huge NPA. That's why corporate banking has basically the risk rating of almost 18%. Yeah, 15 to 18%. Okay, mainly it has 18%. 18. Corporate banking has 18%. Retail has less, 12%. Why? Because the NPA levels are less. Everyone download at that 24/7 app without fail. Okay. What are the various models? The models are horizontally organized, vertically organized, predominantly horizontally, and predominantly vertically. So these are the models. Okay, horizontally organized, vertically organized, predominantly horizontally, and predominantly vertically. Okay. So what are these all? What do you mean by these? So horizontally means what? See this. This is a sure question in your exam. Kindly note. There is no exam of RBWM where this question is not asked. Kindly note, I'll give you the details also. Look at the image first. In horizontally organized, okay, look at this. In horizontally organized, within each product, the data is divided. Means home loan customer will have the database in home loan only. Loan customer will have the database in personal loan only. They will not interchange the data. Home loan employees will not look at the data of personal loan employees. PL employees will not look at the data of home loan employees. Okay, so that is the basic difference. Within the product, the data is shared, but within other products, this data is not shared. So 0% data sharing, 0% data sharing in among the product, various products. Within the product wise, the data is shared. Okay. So within the product or product wise, the data is shared, but with common database among all the products is not there. Whereas in vertically look at it, this is home loan, personal loan, saving, current. There is a common database. So this home loan person can talk to savings account holder. Savings account holder employee can talk to the home loan person so that they can cross sell the products. Cross sell means selling to the existing clients. So kindly remember, in vertically organized model, there is 100% data sharing. I'll show you that. One second. Now we are having this in one more chapter. One more chapter is there, technology. There we are having this again. So kindly note, for initial level, today is just the first lecture. So horizontally organized means there is 0% data sharing among various products within the products. Vertically organized, it is 100% data sharing between the products. Then what is PH? Predominantly horizontally. Some data is shared. There is some part of this outsourcing which can be done in predominantly horizontally organized. So some data is shared. And in vertically organized, some data, I mean 75% mostly, all the data is shared. Mostly, most of the data is shared. So 70%, okay. So predominantly vertically organized model, okay. In majority of the data is shared. Predominantly horizontally organized, some data is shared. Vertically organized, 100% of the data is shared. Horizontally organized, 0% of the data is shared. Be sure about this question in the exam. Okay. What are the assumptions about the customers in retail? Each client is having the unique, okay, unique. Hold on. Huh? Correct. Balkrishnan. Data shared within the department in horizontally. Vertically, 100% data shared. This will be having it again in technology part. Whenever we do this technology chapter, there also we are having this same topic again in details. Okay. So right now today just introduction, just focus on main parts which I am telling you, 100%, 0%. Okay. So assumptions about the retail customers. Each client is unique. What do I mean by this? Each client is unique. It means that every next client coming to you will not come for the same product. Some will come for this mutual fund, some will come for insurance, some will come for loan, some will come for your transactions. FD, this what RTGS not done, NEFT not done, my credit card is not working, debit card is not working, ATM has not given the cash. So every customer's demands will be unique. So that is the main point about this retail customers. Every customer will have his unique requirements. Customers can be broadly grouped together based on the need pyramid. What is the need pyramid? Need pyramid means this. This is Maslow's hierarchy. What is Maslow's hierarchy? Look at this. See this. Firstly, it is physiological needs at the bottom level. Means this person is hand to mouth. Hand to mouth means daily earner, daily earning, daily spending. Nothing, no saving. Safety and security. This person is just above the physiological needs. This person is earning and also saving for some time, some part. Okay. Now, what is the difference between this physiological needs is hand to mouth means basically this person is the poorest lobby of the society. Safety and security means generally who has just gone into the job. Okay, that's safety and security. This person generally has a two-wheeler, some insurance with the lower premium. Okay, safety and security. So some insurance with the lower premium. Then it is this love and belonging, or we call it social. Here, this person is a bit richer than the safety and security. So in social, what happens? This person has some place in the society, some place, some status in the society. So that's social. In social needs, what the customer may require, may say that okay, now this safety and security, I had a bike. Now I'll buy a car. So the social person will have a car. Then comes esteem, rich person, very rich. Here this person is in huge status. Then the person says that okay, I had a car earlier. That was which? But Alto. Now I don't want Alto. Now I want some bigger car. Okay, 20 lakhs car, 25 lakhs car. So that is self-esteem, actualization, self-actualization. Here the person knows that everything is same. Means even I am the general, if I am the general manager of the bank, or if even I am the MD of the bank, it means I am having the same job. Okay, I have to listen to someone and I have to act on someone, right? So this is the level of Maslow's hierarchy. So what all are the product needs? Look at this. For physiological needs, lowest level, we require core savings banks account, mean Jandhan, BSBD, personal accident cover, housing loans with low premiums, right? For physiological housing loan with low premiums. Security safety. This is second level. Recurring FD, life insurance products with low premium. Very important. This low premium is important over here. Longer term, high maturity amounts, right? Everyone looks over here for high maturity amounts. Tax planning can be there. Initial, it is just the initial phase. Okay. Social needs means here this person is requiring has having some status. So it can be consumer loans, personal loans, home loans, car loans, loans to professionals or doctors, engineers, lawyers, CAs. All these are under this social needs. What are the products? Insurance cover tagged to the above loans, retail gold loans, health policies for self and family, right? So these are the social needs. These are the products which we can sell to the customers. ST means rich person, special term deposit, about 10 crores, 5 crores. Term insurance products, above high premium, endowment products of high premium. They are having this, all these customers' esteem needs are having the insurance premium of around 2 lakhs per year. Housing loans, home improvement loans. So these are also given for this esteem needs. Okay. Actualization. Generally, this person is an old person, pensioner, retirement, retirement solutions, pension plans, all these are given to this actualization needs. Okay. So pensioner loans, retirement loans, all these are under actualization. So if you understand the levels of each person, physiological, security, safety, social, esteem and actualization. If you understand the meaning of this, then the products will immediately click you. Okay. What are the retail customers requiring from the bank? They require these 5 points: tangibles, reliability, responsiveness, assurance, and empathy. What do you mean by this? Tangibles means whenever they come in the branch, they must feel good factor. They must have a feel good factor. Means what? If your branch is dusty, employees are not proper, there are huge files lying on the desk, employees are not talking to the customers, that is tangible, which the customer can touch and feel. Okay. Reliability. Reliability means whenever the customer gives you any job, that kindly open the account, kindly send this check for clearing. The customer must feel reliable, means you must be able to deliver on it. Responsiveness, you must be responsive to the client. Responsive means you must be smiling face and responsiveness. Okay, you must understand that we are for the customer is not for us. Assurance. Okay, assurance means the customer should be assured that the job will be done. Empathy, you must think by putting yourself in the shoes of that customer. Shoes of that customer means you must always think from the customer's angle. For example, sometimes some customers do come late in the branch. Late means what? Generally, what happens? We have a closing time, and at that time, some customer comes only once. I'm talking only of that customer who comes only once late, who comes daily late. That's not a point. So, the one who comes late once or twice, we must be empathetic towards that customer. What that customer is having. Somebody might be having some operation problem. Somebody might be requiring to send the money to the operation to the hospital for admission into for some serious illness. Somebody's child's education might have been last day, right, for that fees. So we must be empathetic. We must understand what that customer is going through. Kindly, I'm again telling you, it is not for all the customers because there are many customers in the branches. You might have seen, right? You might be experiencing it on a daily basis. Many customers in the branches, what do? They daily come late. Daily. Every day they are late. Right? So we are not talking of those customers. We are talking of those customers who are sometimes late. Okay? Retail customers requirement from the bank. Product mix, right? Product mix. What is the product mix? Product mix means your product, price, place, and promotion. Means what? Product, price, place, and promotion. There are 7 P's over here. What are the 7 P's? I might have given it over here somewhere. Okay. What are the 7 P's of your product mix in service industry? So the 7 P's are these. What are the ones? See this. I'll write it over here. Product. Because these are asked in exam. Price, place, promotion. Promotion means advertisement. These are the 4 P's for goods. Okay. These are for goods. And for services, we add 3 more. Physical evidence. Okay. Then process, and last one is people. So these are the 7 P's of your marketing or your product or services mix. So kindly understand, for goods it is only 4. Suppose if you are selling some product, then it is only 4. But if you are in the service industry, then there are 7 P's. Product means right product to the customer, price means at right price, place means you have to go to the customer's place. Customer will not come to you now. Promotion means proper advertisement. Physical evidence means just now we discussed clean branch, posh branch, feel good factor. Process. Process means your process should be very fast. Customer should feel happy while taking a loan from you or keeping a deposit with you. People should be friendly, easy to deal with. Okay. Right channel mix. What is channel? Channel mix means physical and e-channels, both the mixes. Physical means branch and DSA. DSA is also the physical channel. So branch and DSA. And second one is e-channels. E-channels means all your app, mobile banking, telephone banking, where we don't have a direct customer interface. Okay. Structured process time across the products and adherence to the timelines. So structured product lines means what are we talking of? Here we are talking of TATs, turnaround time. Now TAT is important everywhere, isn't it? Right? It's buffering? No. Hi, good evening. Is it buffering to all? Everyone? Is it buffering? Kindly type yes in the comment section if it's buffering. Buffering means somewhere the video is not coming proper, there is no sound, something like this. Is it happening like this? Type yes in the comment section if it is okay. If it is good, type okay. Okay means not buffering. Manor, just check at your end. There might be some internet issue. Because for others it's coming as okay. Okay? Achha, now okay. So then it's okay. Okay? So retail customer requirements, delivery of promises. So again we come over here for this assurance. Whatever you promise, you must deliver it to the customer. Satisfactory service experience. Kindly note very important point. If there is one happy customer, means if you give a proper service to the client will not tell anyone. There are more chances that client will not speak to anyone that this bank has given me a good service. But if you give a bad service, that client will go and tell 20% others, don't go to that bank. Very bad. They don't look at you, they don't talk to you. So unhappy customer will always spread the news more. It's basic rule. Bad news spreads more than the good news. Right? So same thing happens. You also might have experienced, all of you, right? That if you do 1,000 things good for the customer, he will not remember it. He or she will not remember it. But you don't do one point, that customer will remember that for many years. You had done this that time. You remember na? 2 years back, you had done that. It was wrong from your side. This is the basic thing I have seen in banking, isn't it? I'll tell you one basic problem. How does the customer work? If you give if you give the form for filling up to the client, and if that client makes a mistake, that client will again blame you. You didn't check it properly. I had given it, but you didn't check it. If you fill up the form instead of that customer, and let it be, we'll fill up. Then the customer comes on you banging. You didn't write it properly, right? So in both the scenarios, customer will always try to blame the banker. It's a general habit. In all the banks, it happens. Okay. I've worked in many banks. I've worked in starting from Cooperative Bank to HDFC Bank to Citibank to DBS Singapore. All the banks have same logic. Customers work in the same fashion. I've worked in all the departments, right from retail to your wealth management, to corporate, right? Corporate, to this, which one? This trade finance, treasury, everywhere. Okay, got it? So, branding. What is branding? Branding means the customer should remember your features. Okay, remember your bank. Okay, I'll ask you a simple question. If I say Yono, which bank do you remember? Yono. Which bank do you remember for Yono? Everyone. Yono. Which bank do you remember? Right? You remember SBI? So that is a branding done. Suppose if I ask you Ayurved, right? SBI, correct. If I ask you Ayurvedic toothpaste, let's say, Ayurvedic toothpaste, which company do you remember? Ayurvedic toothpaste. I'm just saying that much. Ayurvedic toothpaste. Which company do you remember? You'll remember Patanjali, right? Why Patanjali? Because that is a branding done. Branding. If I say car, 90% of us remember Maruti or Tata. Mainly Maruti na or Tata, any of these. So that is a branding done. So what is branding? Branding means recall. You name the product or the product category, you can recall that company's name. Okay. So different bankers market the different products in different names, though they have the common features, right? All your banks, look at it. All your banks, they have the saving account. Saving account is same, but what do you call? In some banks they call it power savings account. Some banks they call it some other name, right? So after all, saving is a saving. But although they have common features, we market it with different brand names. The idea is to make the customer clearly identify the bank with that of the product. Basically, it's a recall value. Recall how much the customer can recall your bank. So two types of brandings are there: product branding and corporate branding. Product means what? Typical to that product. Power savings account. Okay, or mainly Yono. Yono is a product. So product branding. And second is corporate branding. Corporate means we focus on that company as such. PNB, Union Bank, friendly people to talk with, right? That was a tagline of Union Bank, right? Friendly people to talk with. So that is corporate branding. Okay. LIC, जिंदगी के साथ भी जिंदगी के बाद भी. Corporate branding. So there are two types of branding. Kindly remember, product branding and corporate branding. Product is typical product which you sell. Various products will have various brandings. Okay. And corporate means related to your bank. What are the approaches in retail banking? The approaches are SBO approach, departmental approach, and integrated approach. What is this? SBO means what? SBO means what? It is basically each unit is its own business. New generation private sector banks are having this SBO approach. Even the foreign banks have the SBO approach. Means what? It is autonomous division, small enough to be flexible, large enough to exercise the control over most of the factors affecting its long-term performance. SBOs can be defined as profit centers which focus on the product offering and market segment. What do you mean by this? It means that in SBO, what do we do? Your branch here, every branch in the bank is now trying this, all the head offices or banks are trying to make it that all the branches are SBUs. Means what? All the branches have their own income source and they have their expenses from that income only. Head office will not help them. That is SBU. Each branch acts as a separate business. They have to get their own business, their own income. Okay. So SBUs are profit centers which focus on product offering and market segment. Okay. An SBU can be a business unit of a large company or even a small business itself. Right. So a branch of a bank is a business unit of a large company. Departmental approach. This is generally followed in public sector banks. We have this clearing department, cash department, loan department, home loan department, right? So these are generally followed in private sector, public sector banks. Rather than dividing on the strategic or business lines, an organization can be divided on basis of functions via teams, this basis of functions which the various teams perform. Means loan department, they'll only focus on loans. In private sector banks, if you go, there is no loan department. In at least in retail branches, there is no loan department. Everyone does everything. Okay. Departmental approach is a specialized functional approach within the organization. This approach segregates the functions of organization into departments such as accounting, or your in your banking it is sales. It is basically this saving current FD, account opening. So various departments. Okay. Last of this approach is integrated approach. It is adopted by smaller businesses or even the smaller banks. It combines all socio-economic aspects and adopts cohesive approach to tackle the problem in the business. Means what? The employee strength is very less. Each person does all the jobs. It is assumed that having a unified business would reduce the risk and increase the profitability through scale rather than separate entities for each business. So that's what I said just now, that the each employee will do all the jobs. It's not that I'll working only in savings department. If I were when I was working in HDFC Bank, I had to do this account opening also for saving, bringing the account, talking to the client, current account, loan. We had a target of 37 products on a weekly basis. So that is basically integrated approach. Each person will do all the jobs. Okay. What are the various business models? Old generation private banks, new generation private banks, and foreign banks. These, what are the models they follow? The models they follow are old generation private banks. They follow the positioning platform. What is the positioning platform? Is based on the overall business plan and in line with their size and scale. So old generation private banks have the positioning platform based on the overall business plan and in line with the size and scale. This is about the old generation. Means what? Karnataka Bank, Karur Vaishya Bank, okay, KVB. These are all old generation private banks. New generation private banks means positioning platform is top slot across all the classes. HDFC Bank, ICICI Bank, IndusInd Bank. So these are new generation, top slot. Their target is top slot. In exam also you'll get the same question. Old generation private banks, it is overall business plan and size and scale. New generation top slot. Foreign banks, they do not have the positioning platform. They do not have the positioning at all. It's purely on business objectives. If your business is achieved, you are in. If your business is not achieved, you are out. Okay? Means if you look at the, how many of you know this, which bank? Citibank or HSBC? HSBC had sold its retail banking to which bank? Do you know? HSBC had sold its retail banking to which bank? They had sold to, anyone knows? They have sold to Axis Bank. Okay. Why did they sell? Because they see this. They say that if we are not having the profits, we'll exit from that business. Okay. What is SBO? Manohar. Okay. SBO means what? Okay. I'll give you a simple example of SBO. Every family, okay, every family is an SBO. Your family, my family, everyone's family is an SBO. Why? Because we have income source. Every family has a separate income source, and we have the expenses. We manage the expenses from that income source only, right? We don't get the money from someone else. If we get money from someone else, we take it as a loan. For that also we have to pay the interest. Same thing is about the branches. Your head office says that now we won't help you at all. You manage your own business. You get the income, get the savings account, current account, CASA deposit, get the loans, earn the interest, earn sufficient interest so that your electricity charges, your salaries are all justified. AC charges are all justified. So that is SBU. SBU will be definitely asked to you in the exam. Definitely. Okay. SBU works on the principle of MBO, management by objectives. Management by objective means what? First the target is set and then the branch works. Means first we set the target that this year our profit should increase by 15%. That's what the target is. So accordingly what happens means objective is accordingly what happens all the targets are divided to the employees to achieve that 15% growth. So that is MBO, management by objectives. SBO always uses MBO system. Okay. Chalo. Bye for today. Let's meet tomorrow again, same time. Okay. Got it, Manohar? Chalo. Bye.